I'm Harshal. I'm co-founder at ProfitBooks, and I'm delighted to kick off this special webinar on tax planning tips and especially for self-employed professionals. So at ProfitBooks, we understand how complex and overwhelming tax planning can feel when you are managing your own business. So that's why we have teamed up with TaxBuddy, a company that shares our mission of making life easier for business owners. So together we aim to equip you with the insights and tools to manage taxes confidently and focus more on growing your business. So today we are fortunate to have Kanchan Bhatt with us as our expert speaker. Hi, Kanchan.
Hi,
Kanchan is
Harshal.
an assistant manager at TaxBuddy with over 6 years of experience in direct tax domain. She has helped countless clients to navigate tax complexities and align their financial goals with regulatory requirements. Her practical approach and deep understanding of tax challenges make her the perfect person to lead this session. We are confident that by the end of this webinar, we'll walk away with actionable tips to optimize your tax planning and save your money. So feel free to post your questions in the chat window throughout the session, and we'll ensure that they get addressed in the Q&A section in the end. So over to you, Kanchan.
Yes, thank you, Harshal. Thank you for the kind introduction. And it's an absolute pleasure for me to be part of this webinar today. And I hope I'll try to give very good tips for all the viewers so that they can truly focus on what really matters to them as regard as tax compliances are concerned. So the topic for today is a very relevant topic, which is tax saving tips for freelancers, and especially since March is approaching. So advanced taxes we'll discuss on the same, and many other provisions we are going to discuss, which will be helpful for all the viewers. So yes, the tax planning tips for freelancers. First of all, we need to understand that freelancing income comes under the head business and profession. Okay, there is no restriction. Business income can also be in addition to your salary income or other regularly sources of income, maybe interest income or other income, capital gains. And if you have a freelancing income, that you need to account under the head business and profession. Now, under the business and profession head, accounting can be either accrual method or it can be through cash basis method. Based on your preference, you can decide whether you want to go with the accrual method or cash based method. Now, I'll give you a brief about what is accrual method and what is cash based method. Accrual method is you are recording the transactions on the day of billing, even if when you have not received the payment for the same. Whereas cash basis method is something where you are recording the transaction once you have received the payment for the same. Okay, so according to your preference, you can select which type of accounting you want to follow. You have the option to select the same. Now, also there are other, I'm just giving you the brief before moving to the important provisions of income tax. Under business, if your turnover is more than 20 lakhs, then you need to follow the GST compliances also, which you need to apply for GST and follow the compliances there also. So if you are billing and if your income is more than 20 lakhs, then you need to follow GST. You will apply GST on all the billings that you are doing. So GST compliances is also one of the important part of your tax compliances and business compliances. Now, when we are talking about business, so business income is taxed at the rate of slab in which you are falling. Now, under income tax, there are two types of regimes. One is the old tax regime and other one is the new tax regime. Old tax regime is a regime which has higher tax rates as compared to the new tax regime, but it gives you the option to invest in various tax saving options with the help of which you will be able to reduce your taxable income, and accordingly you can save on the taxes. Whereas the new tax regime is a regime where you can pay taxes as per the rates mentioned under income tax, but most of the tax saving deduction options will not be available to you. So you need to decide which regime you want to go with. This is another important point that you need to keep in mind if you're a business person or freelancer. Now, if you want to go with the new tax regime is the default regime that you can file even after the due date. But if you want to go with the old tax regime, make sure that you are filing your return within the due date. So third important point for all the business people are understanding and filing your returns within the due date. To avoid penalties also, it is important. But if you want to go with the old tax regime, it's mandatory to file within the due date, because you are required to file a form 10 IEA, to opt out of new regime and go with the old tax regime. So that also you need to keep in mind whenever you are choosing your regime. Now, most of the professionals have less income. So under income tax, there is a provision called presumptive taxation, which we are basically going to discuss in today's session. So I'll quickly share my screen, and then we can discuss on the same. That will help most of the people to save taxes. So presumptive taxation is a option given under the income tax, where, one second, just one second. Yes, it's an option given, it's a relief given to small taxpayers from the tedious job of maintaining their books of accounts and getting them audited, so that they can focus on their business more. So it's an option for small business people. There is a turnover limit. If you're falling within that, then only you'll be able to opt for presumptive taxation. And there are various other rules also that you need to follow. We'll discuss in detail in the upcoming slides. There are three sections of presumptive taxation under income tax. One is 44AD, which is for non-professionals. If you are not falling under the definition of professional as mentioned under section 44AD, then you can go with 44AD for your business if you are fulfilling the turnover limits. The other section that falls under presumptive taxation is 44ADA, which is for professionals. Like if you are an architect, you are a consultant, then you fall under section 44ADA, where you can show a certain percentage of your gross receipts as your profit. And the third section of presumptive taxation is 44AE, which is for transporters, which is not useful for you all. So we are not going to cover the third section. Basically, we are going to discuss on section 44AD and ADA. Now, to whom section 44AD applies? Section 44AD applies to all the business people, small business owners who are resident individuals, HUF or firms. It does not apply to LLPs. Now, there is a turnover limit. If your total turnover for the year does not exceed 2 crore, then you can opt for presumptive taxation and avoid the tedious job of maintaining the books of accounts, getting them audited, because it takes a lot of time to maintain proper records. So if your turnover is less than 2 CR, then you can go for 44AD. Except to there are certain exceptions also, those who cannot opt for 44AD, but generally most of the businesses can follow this section if their income is less. So if your turnover does not exceed 2 crore, you can go with it for section 44AD. And if the turnover does not exceed 3 CR and 95% of your receipts are through online modes, then also you can go with the presumptive taxation. But for 3 CR limit, your 95% of the total receipt should be through online modes, not in cash. But if your receipts are in cash, then the limit for you will be 2 CR. So this is the important point that you need to keep in mind if you're opting for presumptive taxation. Now, who are the people who cannot go with the provisions of section 44AD? If you are an individual or entities, you are claiming the deduction under section 10AA, which is for SEZ, then you cannot go with the provisions of section 44AD. Second, if you are involved in the business of buying, hiring, or leasing good, then you cannot go with section 44AD. In that case, you can opt for section 44AE, which is another form of presumptive taxation. It's for transport business. Third important point is you should not be involved in agency business. And fourth point, if you have a commission and brokerage income, then also you will not be able to opt for presumptive taxation. So if you are if you're not falling under these exceptions, then you have the option to opt for presumptive taxation, where you can show a certain percentage of your total receipts as your profit. Now, as we mentioned that certain percentage of your income as profit, we need to identify what is that percentage. So in business, first you will identify your total sales. Then you will reduce your expenses. Expenses can be either, if you are not going with the presumptive taxation, then expenses can be either your rental expenses in the property in which you are staying and working on your business. That rental expenses can be part of your expenses. Secondly, fuel and transportation expenses can be part of your expenses. Third, if you have bought any asset, you can claim depreciation on the same. Third expense can be this. Fourth can be either if you have hired any person and you're paying salary to them, salary expenses can be part of your expenses. Then there are multiple other expenses like books, etc. You have bought for research and all. Miscellaneous expenses, food expenses, telephone and internet expenses, and many other expenses are part of business if you're not going with the presumptive taxation. So you have to record all those expenses. But if you're going with the presumptive taxation, you don't need to record any of your expenses. You have to show a certain percentage of your total receipts as your profit, and you can pay taxes on the same. So if you're going with 4480 non-professionals, then in that case, you can show 8% of your total receipts as your profit. Example, your total receipts were 1 lakh. Example, I'm just giving a hypothetical example. For the year, your total receipts were 1 lakh. So 8% of 1 lakh will be your profit, and on the same, you will have to pay taxes if it comes under the taxable limit. But if your total receipts are through cash modes, then in that case, you have the option to show less profit. That is 6% of your total receipts as your profit. So this is one of a very good option given to that will be helpful for most of the people involved in services or businesses to not go into the tedious job of maintaining books of accounts and show a certain percentage of their total receipts as their profit and pay taxes accordingly. So what are the things that will be deemed that have been allowed to you if you're going with the presumptive taxation? It will be assumed that all the expenses like depreciation, office expenses, salary expenses, rental expenses, or conveyance expenses and other expenses have been allowed to you. You cannot further reduce your income below the 8% of your total receipts. So 8% is the net profit in your case if you're going with the presumptive taxation. Depreciation will be deemed to be allowed to you. If you are a partnership firm, then firm salary, interest, etc. will be deemed to be allowed to you. So you cannot further reduce that income. Now, if you believe that your total expenses were more than your income and more than the income, or opting out of presumptive taxation will be more beneficial in your case, then in that case, you can maintain the proper books of accounts, get them audited, and accordingly, you can opt out of presumptive taxation and file your taxes properly as per your accounting records. The other option for those involved in the profession is 44 ADA. So this is generally for service people who are involved in service industry. So resident individuals engaged in profession and their gross receipts do not exceed 50 lakhs or 75 lakhs. So if your total receipts for the year does not exceed 50 lakhs, then in that case, you have the option to opt for presumptive taxation under 44 ADA, where you can show 50% of your total receipts as your profit. Here the limit is more because in services, generally we do not have many expenses. It could be either rent or salary can be there, or transportation expenses can be there. But as compared to people involved in goods related businesses, the expenses in services are very less. So therefore, you have to show 50% of your total receipts as your profit. And you do not require to maintain books of accounts for the same. You do not need to show any proofs that why you have shown 50%. It's an option given by the government, by the department to you, that you can show 50% of your total receipts as your profit. Now, again, if your total receipts are 95% or more of your receipts are through online channels, then this limit of 50 lakhs has been increased to 75 lakhs. So if your total receipts does not exceed 75 lakh and 95% of your receipts are through online modes, then you can show, you can still opt for presumptive taxation, even if your total receipts are more than 50 lakhs, since 95% of the receipts are through online modes. In presumptive taxation for professionals also, it will be deemed that all the expenses have been allowed to you. All the deductions have been allowed to you. You are not required to maintain books of accounts done. You are not required to maintain, get them audited. And also, you can pay your taxes in one installments that we are going to discuss further in the session. That you can how to pay advanced taxes. So 44 ADA is also very helpful for those who do not want to go for maintaining books of accounts and getting them audited. Generally, if you'll say, suppose my total receipts for the year is 14 lakhs, so I can simply show 7 lakh as my profit, And if I'm going with the new tax regime, then I'll not have to pay any taxes. On the other hand, if 14 lakh are my total receipts and I am just a service provider, I don't have much of the expenses, then I would have to pay taxes on whole of my 14 lakh income. So that would be huge. So this option of presumptive taxation is very helpful for business people who do not have much expenses and who do not want to go for maintaining proper books of accounts. Then they can opt for presumptive taxation and show 50% of their gross receipts at their profit and accordingly pay taxes based on the slab in which they are falling. Advanced taxes. So advanced taxes is a concept under income tax which says that you have to pay whole of your taxes on your total income within the year itself. For example, for financial year 24-25, if you have any income, you have to pay taxes on the same within the same financial year itself by 31st March. There are 4 installments of payment of advance tax, but for people who opt for presumptive taxation, uh, relief is given that they can pay entire advance tax by 15th March in one installment. Otherwise, others have to pay their advance taxes in 4 installment, and if they are missing the installment, then they have to pay interest on the same. But for people involved in presumptive taxation, they can pay entire tax by 15th March. So this is again a relief. They don't have to pay taxes in installments. They can pay entire tax by year end and will not have to bear the interest liabilities. There is no requirement to maintain books of accounts. Another big relief of presumptive taxation. You don't have to get them audited. Also, you don't have to maintain any proofs, and you can follow this option. If you want to opt out of the scheme, there is an option, but for that you need to maintain the books of accounts and get them audited if you are fulfilling the limits. Chapter 6A deductions, even if you are going with the presumptive taxation, you can claim the Chapter 6A deduction, which are Section 80C, 80D. If you are going with the old tax regime, then you can claim all those deductions and accordingly reduce your total income. So, for example, your total receipts for the year were 20 lakh and you are going with Section 44 ADA for professionals. So you will show if your total expenses were less and you want to go with the presumptive taxation, then you will show 10 lakh as your profit on which you are required to pay taxes. If you have invested in any of the tax saving investments like PPF, ELSS or Sukanya Samriddhi Yojana, or you have taken a health insurance policy, or you have made any donations, that all you can claim and accordingly further reduce this 10 lakh income to by the amount that you have invested in tax saving investment options. So section 60, this chapter 6A deductions like section 80C, 80D, 80CCD 1B, 80CCD, 80CCD 1, etc. all will be allowed to you and you can claim the same. Set off, there is no restriction that if you're going with the presumptive taxation, you cannot carry forward your losses. So you can also carry forward your losses. Current year and brought forward losses other than speculative losses can be set off against presumptive income. So set off provisions are also allowed to you. There is no restriction that if you are going with the set of this provision of presumptive taxation, then you cannot set off the losses from other businesses with this presumptive tax income. But it should be non-speculative in loss. Now, what are the advantages that we have discussed for presumptive taxation? So presumptive taxation, as we discussed, is a very good option for those who do not have much of the receipts, and generally people in business with lower turnover do not have much of the expenses also. So they can go for presumptive taxation where there is a simplified income calculation. They just have to show certain percentage of their total receipts as their income and accordingly pay taxes on the same within the year based on the slab in which they are falling as per the old regime or as per the new regime. So simplified income calculation is there. There is no need to follow complex accounting procedures and getting them audited. Second, digital receipts benefit. So you can go for the lower tax percentage also if your receipts are through digital modes, online modes. So for those with receipts in non-cash form, an even more favorable provision exists that they can show 6% of their profit as their profit. So this can also help in reducing the tax further if you are going with section 44 AD. Ease of record keeping, you are not required to maintain the books of accounts. So that is another good option of another benefit of presumptive taxation. Audit exemption, since you are following the presumptive taxation, you are not required to go with audit since the limit is less. It is convenient for advanced tax payment. So instead of paying in 4 installments, you can pay your entire taxes within the year in one installment by 31st March. So these are some of the benefits that will be helpful for you if you're going with the presumptive taxation. So what all we have discussed today: first, business, your freelancing income is part of your business, and that you need to identify whether you want to go with the old tax regime or you want to go with the new tax regime, or whether it's beneficial for you that whether you have to go with the presumptive taxation or you want to simply maintain books of accounts and get them audited, or show your profits as per the proper records. So first you need to identify your business and whether you want to go with the presumptive taxation or it is beneficial in your case rather than going with proper accounting. So this is the first thing that you need to keep in mind. Secondly, you need to identify the right regime based on the type of income and accordingly and your investments. If old regime is beneficial in your case, make sure that you're filing your return within the due date, because after the due date you will not have an option to file under the old tax regime, and in that case you will lose the benefit of claiming most of the tax saving options which are available under section 80C, 80D and other deductions. So you need to identify your regime. Third important point is fulfilling the GST compliances, because GST compliance is also part of your business compliance. So that also you need to keep in mind. If your total receipts for the year are more than 20 lakhs, then in that case, you need to follow the GST compliances also. Fourth important point is recording your expenses properly. If you're not going with the presumptive taxation, then it is important for you to maintain proper records of all your expenses, including the cash expenses, because in businesses generally small payments are there, but the number of transactions can be many. So that can also help you reduce your taxable income and the profit thereon. So make sure that you are properly recording your expenses if you're not going with the presumptive taxation, so that you can properly compute your profits and pay the taxes accordingly. Fifth is utilize the depreciation provision. So if you have bought any asset, you can claim depreciation on the same, and accordingly that will also help you reduce your taxes, taxable income and the tax ultimately. So if you're not going with the presumptive taxation, then in that case, record your expenses, make use of depreciation also. Next important point is tedious compliances. So if you're required to deduct TDS on any of the payments, then make sure that you're deducting the taxes. It can be either if you're paying commission to someone or something like that. Make sure that you're fulfilling the TDS provisions also, because if you're going for other than presumptive taxation, then you are required to claim all those expenditures, and if you have not deducted the taxes on the same, that will not be allowed to you as a proper expenditure. So make sure you are fulfilling the TDS compliances also. Next important point is, if you're making payments in cash, make sure that you are not making huge payments in cash, because under income tax, there is a certain limit in which you can make the payment in cash in a single day to a single person. So avoid making huge payments in cash to a single person in a single day. That can otherwise that expense will not be allowed to you, and accordingly your taxes will not be reduced. So make sure to avoid huge cash expenses. Next important point can be advanced tax. So under income tax, as we just mentioned, that advanced tax is a concept. You are required to pay taxes on all your incomes within the same year. If you are not doing the same, then you have to bear interest under 234B and C. So to avoid such interest, make sure that you are properly paying taxes on your incomes. It can be either business income, also it can be the other incomes like interest income, saving bank interest income. So for bank interest incomes, if you're a non-senior citizen, section 80 TTA is allowed to you, where 10,000 is the limit of the 10,000 or the actual expenditure, whichever is less is the amount of deduction. Under the old tax regime, it is allowed. So if you have in practical life also, we have seen many cases where people have huge interest income, general if I say in an amount, it was around 3 lakh, 4 lakh, or in some cases it were even 10 lakhs on FD interest. So make sure that you are paying your advance taxes on such incomes also, because what happens when they are filing their return, they have to pay the self-assessment tax, and also since they have not fulfilled their advance tax compliances, they have to pay section 234 BEC interest, which adds up to their taxes. So not paying more taxes is also a kind of tax saving. So that make sure that you are fulfilling your advance tax compliances also. So these were few tips that will be beneficial for you if you're a freelancer. Identify the type of regime, accordingly act upon it. If you want to go with the old tax regime, you can plan your taxes and invest in various tax saving options available to you, and ultimately reducing your taxable income. And if you're not going with the presumptive taxation, then also you need to identify your tax regimes, and accordingly invest in the various options. Secondly, you need to maintain proper records of all your expenses so that you can truly compute your tax profits and accordingly pay taxes on the same. Taxes will be applicable based on the slabs in which you are falling. The rates are different under both old regime and new regime. So it is important for you to identify which regime you want to go for, and properly record all your expenses if you're not going with the presumptive taxation, because otherwise your profit, you will overly estimate your profit, and on that you will be paying more taxes. So recording proper expenses is also important, and fulfilling various compliances like GST, TDS, and other advanced taxes, etc., is also important for you to reduce your tax liability. So this was all about the things that can help you in tax savings. And now I think we can have the Q&A session where you can ask any of your queries related to taxes.
All right. Thank you so much, Kanchan. So have you got any questions from the participants?
Hello. Hello.
Yes, Mahendra Jain.
Yes. I have a few questions. First question is that suppose I have income less than 1 crore 50 lakhs, right? But suppose the other income is business income 1 crore 40 lakhs, and I have commission income of only 1,000 rupees. Then can I go for 40?
This commission income is other than this,
Yeah, but
business
it is
income.
only nominal.
In that
Nominal.
case, yes, that commission income you can show under other sources. The normal business that you have through which you have the total receipts more than 1 CR, then in that case you can go with the same. And make sure that you are not falling under other exceptions. Then in that case, generally you can.
But commission is under assumption, commission income.
Commission you can show under income from other sources that you cannot include in your business income.
But this director will deduct my TDS under section 194H, no?
On the commission income only, right?
Yeah.
So as you mentioned that the commission income is only 1,000, that income will be part of your income from other sources. The other receipts are part of your business income. That 1,000 you cannot include in business income.
But notice come that why you're not showing the business income, because TDS is deducted under section 194H.
So you are not showing, if you want to show it under the normal business, that also you can do, but for other you can go for presumptive taxation.
So you means I can show two business, one under Presumptive and one other. This is allowed?
Yes, that is allowed. But since you have only 1,000 from the commission income, I think you can directly show it under other sources. There will be no notice for the same.
I have doubt regarding two business, because I can go one for Presumptive and one can go for other than Presumptive. It is allowed? Just confirm.
For 1,000, I generally will not show it under business income. We'll show it as other source income only.
Okay. And so next question is that so there is one clause in the tax audit report, to clause 12, that you have any income shown under 4480. What is that? Because it means I can clause 12 of 3CD.
Okay. I'll have to check the proper clause. But if you have any query,
So what is mentioned in that, whether the profit loss account include any profit and gain accessible on presumptive basis, if yes, they indicate the amount and the relevant section 4480, 4480, whatever first schedule of any other relevant tax. So when I am already under tax audit, then why this section 4480 is applicable?
44 AD is for audit, but if you're going with the presumptive taxation, the audit provisions will not apply on you.
Yeah, that's why. Then why this clause
But
12?
if your turnover is more than the limit mentioned under the section 44 AD or ADA, then you will have to go for the audit.
But
So-
it is what it is saying that what we have to show the amount of profit that relates to business which we have shown on presumptive. But when I am under already audit, then how presumptive both can be applicable.
So your voice is not very clear. I'm not able to get the provision.
Adra will okay.
I'll just share my details with you.
Okay,
One
okay.
second. You can connect with me properly along with that notice that you are discussing. I'll
Yeah.
explain to you that also.
Okay.
You
And
can note down these details.
which
One
time?
second. So these are the details through which you can connect with us
Just a minute.
for
Just a
your
minute.
proper queries
Just a
along
minute.
with details.
Just a minute. Just a minute.
Okay.
Hey, just 1 second.
No problem. I have kept it on share. You can note down and accordingly share me the details that you want to know properly, and accordingly I'll explain to you on the clause.
Yeah, and Mahendraji, once this session is over, we'll send you the detail. So
Yeah.
we will have all the links and email IDs to contact.
Okay. And last one good question.
Sure.
Already you told us, so see if I opt for 44 AD, right? Then can I incur expenses in cash and everything more than 10,000?
Purchase?
If I opt for section 44 AD, can I incur cash payment exceeding 10,000?
Yes, you can. But expenses will not be allowed to you. Now you can do it, but that will not benefit you anyway. It's based on the receipts. The profits will be computed based on your receipts. Expenses will not be allowed to you any further.
That's true, but I violated the provision of section 48(3) and all these things. Okay,
that is not applicable in your case. That is not applicable.
So I can incur any amount of cash expenses.
Yes, you can incur, but as I mentioned, that benefit will not be allowed to you because you are showing the 8% of your total receipts. Income ka 8% you are showing.
That's true.
Profit. You will not be able to further reduce that profit. Even if you do any amount of cash expenditure, how will it benefit you to reduce the profit? So that's why those provisions are not applicable.
Because I'm not afraid that the afterward officer will not add all those expenses which I incur more than 10,000 as a income.
But as I mentioned that under presumptive taxation, the benefit of expenses will not be allowed to you. Whatever you have, whatever are your receipts, you have to show 8% of that as your profit. Okay. So you cannot further reduce that profit. If you want to reduce that profit, then in that case, provisions other than the presumptive taxation will be applicable in your case, where that expenditure you cannot do more than 10,000 and will not be allowed to you. Okay. But if you're going with the presumptive taxation, expenditure doesn't matter.
Okay. Last, already told like books of account not to be maintained, correct? So in GST, I think we have to maintain compulsory books of account more than 20,000.
If you're, yes, for GST compliances, GST is a separate tax compliance and income tax is a separate tax compliance. So for GST, if you're going receipts and all, for GST, you can maintain the records.
Because already limit is 50 lakh.
Income tax, proper audit records are not required, that how you have claimed the expenses. GST is a separate tax.
So we cannot say to GST department already income tax department allow us not to maintain
income tax is allowing you to not maintain the books of accounts because you have to compute your profit on which you are paying the taxes. GST is a separate thing where based on your receipts you have to maintain the books of accounts based on your transactions. So there you don't have to compute the profit on which you have to pay taxes. So GST is a separate compliance and income tax is a separate compliance. Income tax, you need to maintain the records of the expenses and other things. So that exemption has been provided to you for presumptive taxation.
Right now, what I mean, GST department, we can say we have maintained all the sale, purchase, transaction, expense, but we have not maintained complete books of account. Not is it okay?
That is okay. You have to maintain the records of your sales and purchases.
Purchase. Okay.
Yeah.
Okay. Thank you.
Thank you. Thank you.
Okay, great. So, any more questions from the audience?
One last question. Hello.
Yeah, sure.
Yes.
Yeah. Suppose my income is less than 1 CR. Hello, can you hear me?
Yes,
Yeah,
I'm
yeah.
able to hear you.
Yeah. But in that case, for last 4 years, I'm continuously opting for 4480. But this year, my income is less and expenses are more. So this year loss. So it's not possible to opt for 4480. So what to do?
Yeah, then in that case, you can opt out of 4480 if you
Yeah.
think that provisions other than 4480 are beneficial in your case and you want to show the loss and carry forward that. Then in that case, you can opt out of 4480. But there is a provision under income tax that if you opt out of presumptive taxation, then you cannot further opt it for the 5 consecutive years. So that provision.
But in this case, I don't want to opt out of compulsory, but it is compulsory. Compulsory. That's why I have to opt out. That's like all. So
Yes.
in that case also, I cannot go again next year for presumptive tax.
Yes.
Can I go again?
If you're opting out, then in that case, you cannot opt in again for presumptive taxation for the further 5 years, subsequent 5 years.
Then in
After
that
5
case,
years, you can again.
then in case I have to do audit compulsory. In that case, loss.
If you are crossing the audit limits and maintaining books of accounts, you have to maintain the books of accounts. But if you're not crossing the audit limits, then you do not have to get the audit.
So only on the basis of books maintained return I have to file.
Yes, on the basis of the books, audit will be identified.
And for next 4 years, I cannot go.
Yes, but for next year, you cannot go for the presumptive taxation.
Okay. So you provide us. Okay.
Yes.
Thank you.
Thank you. Thank you.
Okay, great. Kanchan, have you got any direct messages? Because some participant might send you.
Okay, yes, and there are in chat, there are some direct messages. I'll just go. Yes, recording has been done. This is paid account, right? I mean, there is no time limit. Yes, acha, okay. So,
from the participants.
Yeah, I see they don't come under 4480. Is advanced tax calculated based on, yes, if your estimates, based on your estimates only, you will pay the advanced taxes. And if your total taxes are more than 10,000, estimated tax liability is more than 10,000, then in that case, advanced tax compliances are required to be done, Rudraji, and accordingly, you have to pay the advanced taxes. So advanced taxes are paid based on the estimates, and accordingly, there are 4 installments based on which you can pay the advanced taxes if you're not going for the presumptive taxation. Under presumptive taxation, there is an option that you can pay whole of your advanced taxes by 15th March. So accordingly, you can fulfill your advanced tax compliances. Can we adopt presumptive taxation in one banana and switch to? We have just answered this question that you have the option to opt out of presumptive taxation, Pamanji, but there is a restriction that you cannot further opt in for presumptive taxation for the subsequent 5 years. Huzefa has mentioned that they want call from ProfitBooks urgently, so you can. Yes, Rudraji. So estimated tax, the tax liability should be more than 10,000 for going for advanced tax compliances. Okay. If it is less than 10,000, then you don't need to go for advanced taxes. Yes, answered. Harsh, all the questions.
Okay. All right. So thank you so much, Kanchan, for such an insightful session. So all your practical advices on tax planning has been invaluable, and I'm sure that everyone here is walking away with a better understanding of how to manage their taxes efficiently. And a big thank you for all of you who joined us today. We appreciate your time and engagement, and we hope this webinar has been helpful to you all. And before we wrap up, I just wanted to share something exciting. At ProfitBooks, we have always looking for ways to make running your business easier. So that's why we are partnered with TaxBuddy to offer you comprehensive GST compliance services. So from GST registration to filing periodic returns like GSTR 1, 2, 3, and even handling tax notices. TaxBuddy has you covered. So, and as a special benefit, ProfitBooks users will receive exclusive discounted pricing for all these services. So keep an eye on your inbox because we'll be sending out an email with all these details right after this session. And we are planning to conduct similar insightful sessions in coming weeks. So once again, thank you for being here today and have a great day. And we look forward to seeing you at more future sessions. Thank you. Thank you so much.
Thank you, Harshit.